Good morning and welcome. It's that time once again, the Patriot Radio News Hour live on this Tuesday. I'm Joe Jaquint, CEO of the Patriot Trading Group. I was off yesterday. I had some other things that I had to get done, but I'm here today. Happy Tuesday. I hope you had a fantastic weekend. The holidays are almost over. Super Bowl is here or coming. The golf tournament. Yes, the Waste Management Open is in town and has started, and then after that, things will quiet down till spring training. Our toll-free number, 800-951-0592, the website at www.allamericangold.com. And just a lot of people, I appreciate the interest. I was talking about bringing on a few people, and one of the questions that I got was, can you use the gold and silver you had? You absolutely can. So if you're looking at a side hustle, right, do it with me. 800-951-0592. We're about a little over halfway to the goal that I had, so we've got a couple of more people that I'm hoping to bring on. And yes, you can use your gold or silver as your in, if you will. For more details, give me a call. I'll be happy to talk to you about it. A lot of things to cover. We got State of the Union today, right? So President Trump's going to go out and tell us all the great things that he's done. We got news out of Harley-Davidson and Steinmart. Along with the Treasury Department, we are going to break a record for debt issuance in the first quarter. We'll cover all of that ground. Updates on when we're going to breach the $1 trillion deficit level, and that's unfortunately just the start of it all. And what else? There's one other thing. Oh, yes. And how many municipalities now rely on the new, those forfeiture laws that have been in effect? We're going to give you an update on all of those things as we go throughout the show today. And like I said, I think the bigger news, though, is the dollar. The dollar's down again today. I know that there was a lot of damage, and I wouldn't even call it damage. The Treasury Secretary last week probably said more than he should have. Right, and I think everybody understands it. The 10-year note has been spiking, now above 2.7271. That is the highest level in years. Wall Street was down 180 points yesterday. It's down 250 more today. And really, we're stuck, right? We're in this horrible situation where if we get growth, then we're going to have rising rates, and rising rates hurts the growth. And of course, the biggest problem is the amount of debt that needs to be issued to fund all of that growth. And then we have word on how much the president wants for infrastructure, so some more debt numbers coming out, and military spending as well. We'll try to put it all together. What does it mean? Where are gold and silver headed? Where's Wall Street heading? And kind of just figure out how best to be ready for what is coming. We got another great opportunity here. Wendy and I were working on it this morning. We'll share all of that with you as well. But Harley-Davidson, they're Viagra's angels, as I call them out here. Sales aren't very good. So one of the other places where we're not making America great again, they reported a 8% decline in motorcycle shipments in 2017 and expect the figure to continue dropping in 2018 and 2019. They've announced that they are going to close their plant in Kansas City, Missouri, to try to, meet the falling sales figures and try to reduce the level of motorcycle inventory. They did not say, at least I didn't read it here, how many people are going to lose their jobs. The plant was a final assembly plant, and out of Kansas City, Missouri. Yeah, they don't update how many people are going to be out of work there. And then we had a new retailer hit the blocks today, Stein Mart. I don't know if they're in Colorado. I know they're here in Phoenix. They're in mostly in the Southwest, Southeast, in Texas. They have another one of those large retailers, 290 stores. They formed, what do they call it? They're exploring strategic alternatives. That's another fancy word for we're going to go bankrupt. The same-store sales down year over year. They said down 7%. The year before they were down 5%. Now they're down 7%, saying that the company's in transition. So add that to the list of – and that one's a new one. That's one I haven't heard yet. And no update yet on Sears Kmart. Their stock was down over 30+% since last Tuesday on word that they're running again into some bankruptcy issues, and we'll have to follow that. And then also today, if I get to it, if I don't get to it today, I'll get to it tomorrow. The IRS updating rules on the crypto. So all of you Bitcoiners out there, the IRS is giving you a final warning. You better come clean before we get to you. So we'll have all of that. We've got a lot of ground to cover, and we'll see how much of it we get through. 800-951-0592. That is the toll-free number. Whether you're buying, selling, trading, we can help you. We've helped thousands and thousands of you over the years. And we'll have to see. There's the music. We'll be back right after the break. Don't touch that dial.
Sergeant Jason Nielsen served his country as an MP in Iraq.
I was in Iraq for 10 months before I was hit by that sniper.
He suffered a paralyzing injury, ending his military service. Paralyzed Veterans of America's National Service Officers, such as Sharita Latham, are trained to help injured veterans get all the benefits they've earned.
She worked with my wife, took care of everything for me just so I could focus on just recovery and trying to get on with life.
To learn more, visit pva.org.
Numbers are starting to roll in and really right on schedule. This is nothing that should catch anybody off guard. When you talk about why is it that we have rising rates and a falling dollar, because, you know, we've been educated over the decades that higher rates equals higher dollar and lower gold prices, right? And falling rates equals lower falling dollar and higher gold prices. And just like everything else that we used to learn and used to have an understanding of, like when you hit 55, you're supposed to get out of stocks and be in bonds and live off the interest and all that stuff. And right as the baby boomers really got to retirement age, what happened? They stopped paying interest on all that stuff. The 3% of GDP rule for debt and all these other things. And this is just another one of the links that's broken now. And the answer really is very simple as to why. The amount of debt that has been piling up is now really it's starting to speed up. Now we're really getting into the heart of the next 10 years. As Congress limps towards the likely passage next week of another stopgap spending bill, the new estimates is the federal deficit will blow through $1 trillion by 2019. So we're already, a third of the way through fiscal year 2018, right? Because the government fiscal year starts at the October, November, December. That's the first quarter of 2018. Now we're at the end of January here. The Committee for Responsible Federal Budget says the red ink in 2019 will be $1.12 trillion. And I want to be clear on what this really is. So there's, like any corrupt mafioso, anybody that runs any quality Ponzi scheme, the government has two sets of books. And actually, I say two. They probably got like five. But nonetheless, the actual deficit number, how much the government goes into debt, they don't report that number. They'll report what I call the good number. Hey, we don't want to count the money that we lent to people going to school or lent on their FHA house or that stuff. We don't want to count that as the official number. This is without us doing those programs, everything else. So this is what I call the good number. Will be $1.12 trillion in 2019, and that number is a fluid number. In other words, it's been rising because of all of the policies. You know, we still have an infrastructure bill. We still have the military bill. I expect that number to grow, and they're now saying the deficit will exceed over $2 trillion by 2020. By 2027, it will exceed that a lot sooner. Don't worry about that. But the previous deficit was 600, the good number, like $668 billion last year. This year, they're calling for the number to be somewhere around $900 billion. By 2019, the number is going to be $1.12 trillion. You understand what I'm saying? In addition to all the other debt, you know, we got almost $21 trillion in debt that we got to roll over. And then we're adding $1 trillion, trillion and a half, $2 trillion, $2.5 trillion every single year. And then the Treasury Department announced yesterday that it expects to borrow $441 billion in the January to March quarter, the largest amount in 8 years. The Treasury said the figure compares to actual borrowing of $282 billion in the first quarter. So the October to December was $282, and then there's going to throw another $441. That's $723 billion. It's going to be close. I actually think we're going to exceed the $1 trillion number this year, but we'll have to wait and see. It'll be the largest borrowing since the government borrowed $483 billion in the January to March quarter of 2010. So we're pretty close, 441. Here's the problem. Next year, we'll set the record. Right? By next year, that January to March quarter is probably going to exceed well over $5, could be $600 billion. And of course, in 2010, the government was still doing the stimulus. Right, so the stimulus spending, trying to get out of the Great Recession, and now we're getting ready to take those numbers out. The government borrowing needs have been rising as the federal deficits have increased. The deficit for 2017, that's $666 billion. They're now saying new estimates already $765 billion, and I think now they're getting ready to add a couple $100 billion to that number. And the Treasury is also projecting deficits could once again top $1 trillion a year. They're saying the growing cost for Social Security and Medicare as the baby boom generation retires. Remember, 10,000 people a year, 10,000 people a day are retiring. And the cost of the big tax cut package, we'll have to wait to see what that number is. To cope with the higher borrowing needs, the Treasury has asked Congress to raise the borrowing limit, which currently stands at the $20.5 trillion. Of course, that's the spending bills and all of those other things. So it's really a simple issue, right? We're spending money to get growth, right? So we're adding to debt that's already at unprecedented levels. And part of the problem, like they talk about how much Social Security is increasing. They talk about how much Medicare is increasing. These are all things that we've been talking about. And I try to tell people, and they don't understand because they get things misrepresented to them. Already, Social Security is already not collecting enough money. But the government uses the fake trust fund, the IOU stuff, the fake interest that they pay, and all of those things. And it's like I tell people, when they say that Social Security is going to run out, and whatever year, 2030, 2031, whatever year that they want to say, and I'm telling you, I think it's going to be out before 2027. Why is it that they go from 100% to 75%? And the answer is simple, because over the next 10 years, Social Security is going to be underfunded by 25%. They just pretend that they don't want to own up to the fact that, listen, we spend all the money. And they play a bunch of games with the accounting and the gimmicks to try to tell us that, hey, we've still got time. Right? We're not out yet, right? We got till 2030. No, it's already started. And when you start seeing these numbers, this is why the debt's going to go up so fast. Think about this. The trust fund itself, that really doesn't exist, but it exists on paper, right? They claim to have, almost $3 trillion in it. Over the next 10 years, that's all going to be gone. So now you got the $3 trillion, that gets immediately added onto the debt, on top of all the 10,000 people a day that retire, on top of, and that's not even Medicare. And so you have the situation today, which I think is very, very logical, which is we've added so much debt that now we're at the point where interest rates are rising, yet the dollar is falling, because everybody understands what is happening, right? Steve Mnuchin understands it very, very clearly. Yes, ultimately, a strong dollar would be really good for America, but the realities are the dollar's got to go down, because we got the printing presses going out and operating at full strength. And so to yesterday's announcement from the Treasury, I mean, you think about it, this is, I guess, the best year we've had economically since the Great Recession. And we're going to smash every non-stimulus or war deficit the country has ever run during the quote-unquote best economy we've had in a decade, and more than a decade. And this is the problem. And so this is why you have the dollar falling, because most people, and I don't know, right? Are we in the seventh inning, eighth inning, to use the baseball reference, or when is the rally going to end? And obviously the 10-year note spiking now, causing some heartburn on Wall Street. And now the Treasury Department comes out and says, okay, here's the real numbers. Right? This is what we're going to be borrowing. We're at $723 billion in the first 6 months. Right? So now we're sitting there, right? We know where it's like, okay, we're running a $1.5 trillion deficit in 2018. In 2019, it's going to be close to $2 trillion. By 2020, we're going to surpass that number, and we're kind of really in this wasteland, this debt wasteland, because this has been the only solution. When you really think about how did we fix the problem, we took a debt problem and we blew it up. And now we've got a bigger debt problem, and now we've got to operate the printing presses at full steam to try to pay for it all. And the Treasury's saying that we've got to, that's a lot of money. And that doesn't include all the debt that rolls over every quarter. So right now you've got $20 trillion worth of debt, almost $21 trillion worth of debt. You roll about, I think on any given year now, and I don't know the exact number, but somewhere between $7 to $10 trillion a year gets rolled over. On top of, now we're going to be issuing somewhere between $1.5 to $2 trillion in additional debt every year. And so you kind of really get to thinking about, hey, in 10 years, we're going to need to roll over $20 trillion, maybe $25 trillion a year. And on top of that, even the Treasury's own numbers, it's going to be $2 trillion, and you know that number's light, right? And that doesn't count what's happening with interest rates. So as these rates rise, every 1 point in rate rise. So the 10-year note was just over 2%. It's now at 2.7. Most people think it'll be about 3 here pretty quick. That 1% move from 2% to 3%, that adds $200 billion plus to the deficit just on increased interest alone. And that number grows every year because the deficit gets bigger every single year. So you can kind of understand why the markets are behaving in a way that a lot of people didn't predict. And then when you think about it, you're like, oh, that makes sense. And it's one of the reasons why this has been the best opportunity to buy gold and silver and put it away since 2001. I know Goldman Sachs says it's the best opportunity since 2004, and I guess, gold really started running in 2004, but it was, it did 2001, it hit the bottom. It was a little better in 2002, it was a little better in 2003, and then really started to run in 2004. And we've got a similar situation today, right? It was a little better in 2016, a little better than that in 2017. Now 2018 is going to be even better than that, and we're starting on that run up. And the answer is really a simple one.
This is the Phyllis Schlafly Report from Phyllis Schlafly Eagles, a national volunteer organization founded by Phyllis Schlafly and continuing to uphold her legacy by opposing radical feminism and representing a traditional conservative perspective in our nation's capital. Now from the Phyllis Schlafly Center studios, here's Ryan Haidt.
It goes without saying that Americans have much to be thankful for. We live in the greatest nation on the planet. Let's also not forget that we enjoy the freedom and liberty secured in our unprecedented United States Constitution. Each of these blessings should remind us of one man to whom every American owes a debt of gratitude. That man, who is being systematically removed from the public sphere, was passionately defended in the May 2002 Phyllis Schlafly Report. His name is George Washington. In an age where figures from history are expunged by a new wave of political correctness, it's almost not surprising that the father of our nation would be a ready target. Rather than praise the heroes that made America great, academics want to focus on the dark spots in our history. When we only teach children the bad parts of our history, we are instilling in them a disdain for America and American culture. The ultimate danger of this anti-America viewpoint is that it will lead to the corrosion of freedoms we enjoy as a nation. If people believe that our Constitution has nothing good to offer, they will surely not preserve it. If people believe that America wasn't founded as a Christian nation, we are certain to lose our moral compass. If people believe that George Washington was a marginal or even antagonistic figure in history, his work will be preserved no better than his good name. As Phyllis Schlafly put it, George Washington was history's indispensable man. It's no exaggeration to say that, without his leadership, we would not have a United States of America. He even gave us the gift of a Thanksgiving holiday by issuing a proclamation in 1789, making the last Thursday in November a day of public thanksgiving and prayer on which Americans should thank Almighty God for granting us an opportunity peaceably to establish a form of government for their safety and happiness. Let us not forget the blessing of a heritage of freedom handed down to all Americans from men like George Washington.
This has been the Phyllis Schlafly Report from Phyllis Schlafly Eagles. Whether it's the vision of our founding fathers, the courage of our veterans, the moral compass of Christopher Columbus, or the fortitude of presidents like Lincoln and Reagan, the truth of history should not be undercut by liberal ideology. At Phyllis Schlafly Eagles, we honor history even as we look to the future. Join us at phyllisschlafly.com. That's phyllisschlafly.com.
800-951-0592, and really just start, you think about what it is I just said and try to get your head around what the Treasury just announced yesterday. And it kind of now, when you hear that, it makes sense about what Steve Mnuchin said last week. The dollar is headed down, and it needs to head down. And the reason it's heading down is because we have a debt problem. And you start to really think about what it really entails. So the last debt problem we had, right? Gold went from 250 to 1900. And then we had, about 3 or 4 years of we fixed it, right? Where gold went from 1900 down to 1050. And now we have, unfortunately, what we're living with today is the problem of we fixed it. Right? Now all of a sudden we're seeing asset prices are all out of whack, right? The stock market, just really an indication of the inflation and all of those things. We've got the gold prices that's been rallying. Now the bond market is causing indigestion. Right? In the bond market, it's the biggest debt bubble of them all. So when you start to think about what the Treasury really is saying, let's just, look at it this way. The economy's $20 trillion, GDP, $20 trillion. If you have $2 trillion of debt, that's 10% of GDP. I don't care what metrics they use. That is an unsustainable outcome for anybody. Right? We're not talking about 3% or 4% or 5%. You're looking at 10% plus. And that's what the Treasury really said today. This is where it's going to go. So as you sit there and you think about where the gold price is, I'm afraid to put a number on. I know this. I won't like it, but I'll tell you right now, if you don't have gold, you're going to wish that you did. Take the time, put them away. We've got another fantastic opportunity. Right now, gold is $1,338. We've got 40 $20 gold pieces right at dead spot. So you can buy $20 gold pieces today, $1,338. I've only got 40 of them. $1,338. This is the second time in 22 years that you've been able to buy $20 gold for spot at 800-951-0592. And you know what? It's funny is there's a lot of debt problems out there. This was out of, I want to give credit here, this was out of Fox. 3-time Rotary Club Ambassador of the Year. Alabama car dealer Jimmy Vibbert, a hometown hero until he had been branded a felon. His alleged crime? Selling 2 cars reportedly purchased with drug money, which in the eyes of an Alabama prosecutor made him a money launderer, guilty of taking, quote-unquote, dirty money. He was arrested in June of 2015, and they seized his assets. In this case, he had $25,000 in the bank, which, it's not a huge amount, but it's a lot, right? In today's day and age, that's a lot. His mugshot was plastered all over the news. His $2 million a year business was out of business. Nobody wanted to buy from us. People whispered, you buy from them, you go to jail. It cost us our business. Of course, he dropped out of the Rotary Club, fell behind on his house payments, stopped going to church. I mean, the whole thing. Had to go through two separate legal proceedings, a criminal trial on title fraud charges, and a separate one related to civil asset forfeiture. Guess what? He wasn't guilty. I didn't do anything wrong. He was cleared of all charges. Here's the problem. He got, this was June of 2015. 6 months later, he's cleared of all charges. Was finally able to get his $25,000 back, but lost his business, right? And his reputation is ruined. And it is part of a problem that 1,400 largest municipalities now, the cities, rely on police that are empowered to take cash and other assets based on what they consider to be probable cause. Right? So they take your money before you ever have your day in court. 60% of the 1,400 municipal and county agencies surveyed across the country rely on forfeiture profits as a necessary part of their budget. And while anyone can have their assets seized under the law, the civil forfeiture law, the burden is felt on the most heavily on the economically vulnerable, right? Well, that's any small business out there. Right? I mean, not even a small business, whoever, they freeze your bank account and take your money, you're done. Maybe another reason. You know what? I didn't even think about this. Another great reason to have some of your money in gold, right? They freeze all of your accounts. At least you got a way to get some more. But yeah, 60% of all municipalities now count on this as part of their budget. The police have been I guess as like anything else, right? We need to stay in business. We need to go out and get the money. Civil asset forfeitures takes the material support of the criminals and instead makes it the material support of law enforcement, funding priorities like new vehicles, bulletproof vests, opiate overdose reversal kits. I'm not sure what that is. Some form of drug kit, I guess. My guess is what? Someone's OD and you need to save their life. And better training in departments across the country. This is now being funded by the civil assets or forfeitures that are going on across America. And it's just another example. Right? They're broke. They need the money somehow. Here's a great idea. Let's just take it from the citizenry. What do you think is going to happen to all of the other things when it's the national government, the federal government? They just take it from your account. Patriot Radio News Hour. We'll talk about cryptos next. $800-951-0592. Just the second time in 22 years, U.S. $20 Liberties spot. So whenever you call, because it's too hard, gold's obviously moving all over the place. Whenever you call right now, it's $1,338 in change right now, $1,338. But whenever you call to order whatever spot is, that's what you'll be getting them at. 800-951-0592. And now you think about, I don't want to say everybody, but most of the companies that forecast gold are are now saying somewhere, even the low side guys are near 1,400. Right, most of them are somewhere between 1,450 and 1,550, and then you got some of the guys out there are at 1,700, 1,800 before the end of the year. So picking them up at spot, those are opportunities you just don't want to let go by. U.S. $20 gold pieces, whenever you call today, whatever the spot price is when you call, that's what you'll be getting them for. Bitcoin. With all the excitement and opportunities around cryptocurrencies, it may be easy to forget about crypto taxation. Almost every Bitcoin or other what they'll call altcoins, every transaction, and this is the part I did not know, every transaction, according to the article, the mining of one, the spending, the trading, the exchanging, and then it says airdrops. I don't know what that is. And then the word etc. is a taxable event for U.S. tax purposes. Without a doubt, 2018 will be a landmark year for the IRS enforcement of cryptocurrency gains. Taxpayers should be ahead of the game rather than reactionary. The IRS is always more lenient with taxpayers who come forward on their own rather than those being discovered by the IRS. They said coming forward could be the difference between criminal penalties and simply paying interest. Oh, the IRS interest, never a good one. With only several hundred people reporting their crypto gains each year since the Bitcoin launch, the IRS suspects that many users have been evading taxes. So the way I'm reading this, and I don't know a ton about the cryptos, but you've got to report the gain whether you sold them or not. Trading cryptos produces capital gains or losses, which can be taxable. Exchanging one token for another creates a taxable event. Receiving payment in crypto in exchange for products or services is treated as ordinary income at fair market value. Spending the coin is a tax event. In the example they gave, you bought a coin for $100. If that coin was then worth $200 and you bought a $200 gift card, you owe taxes on the $100 that it increased. Converting the currency to another, right? So converting here in the United States, converting it to dollars is a taxable event. Airdrops, which I don't know what that is, but they say considered ordinary income on the day of the airdrop. So for those of you crypto people out there, I'm sure you know what that is. That is a capital event. Mining of the actual coins themselves is a taxable event. And then, of course, the IPO. So just to keep you updated, I know we don't spend a lot of time talking about the cryptos, but in any event, it looks like pretty much anything you do with them is going to be a taxable event, and the IRS is, I guess, looking for you. Chesapeake Energy going to be laying off 13% of its workforce. That just hit the tape. And then a new survey is out on the tax cuts. You know what? I'm going to wait to the final segment. No, I'll do it now. I got time. Here's how the companies say they're going to spend the tax cuts. 36% of the tax cuts are going to be spent on buybacks and dividends, and I'm not surprised by that. 23% said CapEx. Hey, that's a good thing, right? That means they're going to spend some money. 13% on debt reduction. 16% on other things, and they didn't say, what those other things were. The smallest number in the survey higher wages. 12% of the tax cuts, at least from this survey, say are going to go to actual wages. The Trump administration economists said that the workers would receive 70 to 80% or 80 cents of every dollar on tax relief. Right now, at least from this survey, this was done by CNBC, 12% of the tax cut will go to worker wages. 3 times that amount will be going to buy back their own shares. Then, some CapEx and some other things. But that is how all of that is going to break down as well. And that just came out about 12 minutes ago, CNBC saying how businesses are going to spend their tax cut dollars, 36% going to buybacks, 12% going to wages. The federal deficit could add another $154 billion if just 5 states do an end around on the Trump tax law. We'll finish with that. Patriot Radio News Hour, final segment coming up. Final segment, Patriot Radio News Hour. Apparently, the high tax states, where the tax cuts, they can't take the deductions and all of that stuff. They can make some changes to their tax codes, which apparently they're going to do. That's going to cost the federal government an additional $154. But just add it to the number. California and New York, just California and New York alone are $10 billion, but they say California, New York, New Jersey, Illinois, and Connecticut all are going to be, I guess, changing some state rules that will allow at least their government to save some money by causing it to be at the detriment of the federal government. So add another $154 billion. Man, you see how quickly it's going to add up. Quick look here at the market. Dow's down over 300 points. Probably not super surprising as the bond market, the 10-year note, 271 in change. And people differ. Some people think that anything above 2.6, but somewhere between 2.6 and 3% is, bad things happen after that, and it's kind of hard to see, how we're going to stay under that number. I mean, if the Federal Reserve, which they have a meeting here this week. It's a there's no press conference. It's Janet Yellen's last meeting. There's not going to be a rate hike. But nonetheless, if you think that there's going to be anywhere, is there going to be 2 rate hikes, 3 rate hikes, 4 rate hikes, somewhere between 2 and 4, kind of logically assumes that the 10-year note should probably be somewhere closing in on 4%. So the Dow is having a little heartburn here 2 days in a row. Of course, the day's not over, so we'll see what happens. It was down almost 200 points on Monday, down another 300-plus points today. U.S. $20 libs and Saints, $20 gold pieces. Our choice, lib or Saints, spot. So wherever spot is when you call, as example, right now, spot is 1337 right now. So 1337, but wherever spot is when you call, that's what you're going to pay. Only the second time in 22 years, and really, it's been, I think, the second time we had spot once before last year. So spot today at 800-951-0592. Take the time, put them away. Just really think logically about what is really happening in the world. You see the news out of the Chinese and the Russians and gold holdings and currency reserves and China now clearing trades in their own currency and all these central bankers talking about how they're going to be adding the yuan to their currency reserves, and then, the Treasury Secretary kind of let it slip out. I know they tried to cover it up, but really saying, hey, listen, the dollar needs to go down. And the reason is we got to finance all this debt, which means we're going to start the printing presses at levels that the world's never seen. I mean, think about, here it is, you could really argue 2018 or 2017 was the best year we've had in a long time. Not that it was great, but, it was the best year we had in a long time. And the Treasury says, hey, we're going to break records in debt issuance. 800-951-0592. That is our toll-free number. Patriot Radio News Hour. We're going to have a great Tuesday. We'll be back tomorrow.